Welcome to Drill Down Earnings. We have quarterly results out from Applied Materials at Monster Semiconductor Equipment Company. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. And we look at the 50 most important companies in technology is absolutely one of them. This company reporting second quarter fiscal year 2025 numbers, right in line with what Wall Street expected. The guidance was less than what Wall Street expected for next quarter, although kind of right in line with what I expected as well. But who cares about expectations? That means we just got things, in this case, right. But disappointing guidance. Let's look at what's actually happening here. The big numbers, $7.1 billion in revenues, up 7% year over year. Revenue growth is really hanging in there for this company. Despite all the tariff headwinds and concerns about slowdown in China and export controls into China. We're going to talk about all that. But a record quarter, record earnings per share for this company at $2.63. Really nice cash flow generation, $1.6 billion in the quarter. I mentioned the guidance disappointing. It's still showing 6% growth. It's still showing $7.2 billion in revenues, which would be a record quarter for this company. So, they've done worse. And operating margins continuing to improve at this company. When I go through my model line by line, the revenue numbers are higher than I expected a little bit, and the cost numbers are smaller than I expected, which of course means more profits. In particular, they talked in a conference call and in the press release about how artificial intelligence is driving every aspect of their business, and the continued build out of giant R&D centers are driving their business, and they're taking big stakes in some of the companies that are doing this, and advanced packaging and innovation there is also driving more. But AI is the dominant driver of their business and of their investments, and they see long-term AI-related technologies, not just logic, but DRAM and particularly high bandwidth memory and packaging as long-term secular growth areas. Now, semiconductor systems, right? Selling the machines is so much more important. Their services business, 22% of revenues, but 74% of the revenues are from selling machines. Services were a little bit light in this quarter. But the equipment sales continue to improve, again, at a 7% rate on a year-over-year basis. One of the interesting things as you dig into the numbers is you see that China, both in raw numbers and as a percentage of sales, it's still the biggest customer out there for in terms of country basis, but it's declining. It was as much as 40% of revenues in the middle of 2023. Here we are 2 years later, and it's down to about 25% of revenues. So China in decline, and they're blaming export controls for that. I think it's really an important thing to keep an eye on here. When the numbers came out, the stock sold off down 6%, both as the conference call continued and, of course, that guidance that was somewhat disappointing. And the stock, indeed, is down 19% in the last year, despite the nice move since the lows of Independence Day in early April. So as we look at what's really happening, what's driving these results, DRAM is staying really strong for this business, and that DRAM in the chart that I'm showing you here is in the orange. If you're looking at us on YouTube or Spotify, you can see that DRAM has really been strong for this company, and has been a growth area really for the last, call it 2 years, year and a half, and they think it's going to be a growth driver going forward because they talked about strong demand for advanced DRAM, especially DDR5, which is the new generation of dynamic, what is it, DDR5 stands for? Dynamic Random Access Memory, or Double Data Rate 5, whatever. That's the newest, greatest thing in DRAM, but very important as those DRAM chips kind of surround. If you ever see a picture of an NVIDIA chipset or an AMD high graphic processing unit, you'll see this usually golden DRAM chips all surrounding that. That's that DDR4 and soon to be DDR5 that is really driving the ability of these machines to run these massive data loads that AI requires. They think they're going to see 40% year-over-year growth in DRAM revenue in fiscal year 2025, which of course we're halfway through already. Here's CEO Gary Dickerson.
With DDR5 and HBM, 40% growth with our top 3 leading customers. So that business is growing at a high rate, and we are very strongly positioned. If you look at what we've been able to achieve in terms of share gains in DRAM and where the DRAM architectures are going for the future, the next big inflection is 4F squared. That architecture is a great opportunity for Applied. We're deeply engaged with all of those different customers, and we will outperform with all of our innovations as that new architecture is adopted. So again, very strong growth in DRAM for Applied, outperformance in the past and very well positioned going forward.
So strong DRAM demand. Strong DRAM demand. I can say that. I can't see. Strong DRAM DDR5 demand. Quite alliterative there. Driving results for Applied Materials and CEO Gary Dickerson. But what's it all mean? What's your big drill on earnings takeaway? And what's the one number that tells you a whole lot? Well, Q2 fiscal year 2025 earnings from Applied Materials. And what you really want to know about this quarter, $7.1 billion in revenues was up 7% on a year-over-year basis. Growth continues despite tariffs, despite the slowdown in China. And I mentioned the drill on earnings bite, and that indeed is the drill on earnings bite. 25%. 25% of revenues for this company, for Applied Materials, was in China in the last quarter, but they say that number is going to continue to decline because of export controls, down from the 40% it was 2 years ago, and yet the business is still growing, driven by DRAM. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.